Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. Today I want to talk about the declining of the Chinese stocks and the Chinese stock market. It's really kind of impressive. While the S&P 500 and the US stock market climbed from high to high, the Chinese stock market just declining and really underperformed. And in this video, I want to tell you what I think about this situation and what I will do with my stocks in my portfolio. So lately, over the last few years, and especially over the last 18 months or so, the S&P 500 outperformed the Chinese stock market by a mile. It's really incredible how much the Chinese stock market underperformed the S&P 500 over the last few months. And with that, also my positions in my portfolio, my Chinese positions in my portfolio, Alibaba, underperformed the market heavily from the highs at the end of October 2020 to now. Alibaba declined almost 35% to currently $206, which is really incredible much if you think about that. In the same time span, the big tech companies in the US just go from high to high. And also my second Chinese stock, Tencent, also declined a lot over the last few months from around $100 to currently $66. So what's the problem here? And the big problem is the Chinese Communist Party, which just tried to control and regulate almost everything, like always the communists do in the past. There's a big trouble for the businesses in China. There's a lot of control, especially of the tech, a lot of fines lately also for Alibaba and Tencent, and just now also Didi just get control of the Chinese communists. And next to that, also there is a big trade war between the US and China, and with that the discussion about delisting Chinese stocks from US stock market, and then of course the trade war overall, which was started by the Trump administration and still goes on and on and on. With all of that, there is just a very negative sentiment on the Chinese stocks and the Chinese businesses. And of course, as we all know, the stock market is not just rational. There is a lot of emotion, a lot of sentiment, and so that it seems like the investors don't trust the Chinese stock market, and especially don't trust the Chinese Communist Party. And of course, you never should trust a communist. I can tell that from own experience. I was born and raised in the GDR. But next to that, there is a reality. The one thing is a fear and the politics, all of the noise, and the other thing and the reality is the US-China trade booms as if virus terrorists never happened. Better economics, really trading between US and China than ever before. And so on the one side you have all these negative news, and on the other hand life just goes on and trading just goes on. That's the reality. And also the reality is that of course the US market is highly valued. Chinese stocks are less valued, still over the 25-year average, but compared to the US market, the stock market in China is really cheap, or at least seems like really cheap. And then of course, when you look in the future, you have the emergence of the middle class, especially in Asia. The estimate is that in 2030, 72% of the Chinese people will belong to the middle class population, and the middle class in the emerging markets, especially in Asia, will just rise. And of course, especially in China and India. So you have already a big market, the developing of these markets, and more people come to the middle class and will consume also a lot of products. This market just gets bigger and bigger. And with that, because the Asians and especially the Chinese, just so many people, also their part of the global spending will be higher and higher. And so China's contribution to global spending on luxury goods, for example, will estimately go to 40% to 2025. Even now, when you compare the China's single day versus the US holiday sales, you see how much more the Chinese people just pay. This just give you an idea how big this market really is. A big market already, even bigger market in the future. And so, of course, companies like Tencent, Alibaba, Baidu, all the big players from China will heavily earn and grow with that. You see this already. This, for example, is a revenue of Alibaba over the last 7 years. And then you just see how much this business is growing and will grow also in the future. That's the reality of the business. And of course, with all the problems and trouble making by the government and the communists, of course, this is an issue. And of course, this doesn't make the things easier for the Chinese companies like Alibaba. But the reality so far is they grow and grow and grow, despite all the problems and all the trouble from the communists. And so, after all, as always, you just have to focus on the business. And so it seems like on the business side of things, everything is fine and bright, despite the problems making by the Communist Party. It seems like the rest is just noise, as so often in the stock market. And it's not just me who think like this. Also, two of the best investors ever, Monish Pabrai and Charlie Munger, just lately invested in Alibaba, for example, and heavily invested in Alibaba. And so did I. And so Alibaba with 6.1% and Tencent with 5.16% of my portfolio. So overall, I have a little bit over 11% of Chinese stocks in my portfolio, and I'm quite happy with that. Despite the fact that right now Tencent is my worst performing stock with 9.7% in the minus, and Alibaba my third worst performing stock with 7.48%, which of course isn't easy to see your companies declining in a time where the whole market just make one high after the another. But overall, I'm very happy with my portfolio, and here you see all the positions in this portfolio. If you're new to my channel, you'll find deeper analyses to all of these companies, and of course also to Alibaba and Tencent, where I describe more the great business model and the very bright outlook. And so, after all, I think it's a lot of noise. Of course, there are problems, and there are also serious problems, and you never know what communists will do next. But I think in the long term, everything comes down to the business side of the things, and there, Alibaba, Tencent, the two stocks in my portfolio, are just great companies, and sooner or later also the stock price will follow that, as it always do. And so for a long-term value investor, there's nothing better than great businesses on the one side and a negative sentiment on the other side, because then you have the chance to buy into great businesses for reasonable prices. And that's what I did. But this is a long way to go from here. That's my opinion. Let me know in the comment section what you think about the whole China-US situation, about Tencent and Alibaba, and then just let's discuss maybe also other opinions. That's it for today. Thanks for watching. See you the next time, then with another video about another stock. See you then. Take care. Bye bye.